Good evening, all. Welcome to Tuesday night.
Hey, freedom! Freedom for our Victorian friends. Congratulations, Victoria. For anyone watching here in Vic, for those watching overseas, you'll have absolutely no clue what I'm talking about. World's longest lockdown ended yesterday. Thank goodness for that. So very, very grateful for the easing of lockdowns, and I hope everyone's safe and well and enjoying booking all their favorite restaurants and bars or whatever it is that you look forward to doing. So getting into BTC and everything happening over the last little bit. If you've been following along with Ads' daily updates, you'd probably be well versed on where we sit right now. But we're going to have a look at BTC and the regulated markets. As always, if you do have comments or requests or want to see the indicators that we use, all our custom indicators, or what we're seeing in the markets every day, hit that subscribe button on YouTube or head over to unitytradinggroup.com and come and see all of the goodies that we produce on a daily, weekly, monthly basis. Ads, BTC, what's going on?
BTC. So yesterday during the update or last night during the update, when I did it yesterday evening, posting in the Discord, the Facebook, everything like that, we really identified this ascending wedge structure. And most of the time, with something like this, it's a 50-50 shot on which direction it does go, as you probably already know, bro. So we're unfortunately, and that was terrible. And unfortunately, an ascending wedge structure could break to the upside as much as it could break to the downside. So it's a little bit of a 50-50 shot, and we should be planning for both sort of scenarios where we could end up from here at 13.8, where our highest quality daily level of supply is, or as we did identify yesterday, and as we got that touch on that 12.8 level last night, we could end up back here around that 12.8 level if we do break down out of this ascending wedge. So it's going to be an interesting play. The volume, however, is quite concerning, where we did have quite a decent amount of volume on the 4-hour time frame for quite some time, where we were ramping up. That price action was following that ramp up of volume, but now we are coming back down the other side of it, and we are starting to see a little bit of it looks like to me a little bit of weakness in the price action that we're seeing now over the last couple of candles, and ultimately just moving in this little zone that we're forming here. So it's going to be interesting to play. It would probably be really unrealistic for me to give everyone a definitive answer on which direction we're going to go. But I'm here to tell you that we have a very high quality level of supply up the top at 13.8. So if we're looking at a higher time frame macro scale event here, if there's one last push in this BTC run, that's where it's going to end up at 13.8.
Yeah, and I agree with that. Funnily enough, if you Google Unity Trading Group, in most terms, you'll find a guide for it. But we do have a guide for broadening wedges or ascending broadening wedges at unitytradinggroup.com/broadening-wedges, where we talk about a lot of this. And that formation that Ads talks about right now is called the ascending broadening wedge, I guess is probably the closest representation of what we're seeing here on Ads' chart. So yeah, definitely the likelihood of hitting that top supply zone is looking pretty good right now. At least on the 4-hour, we do have some levels to proceed above. If we're looking at our CCI and our RSI, we do have a little bit of travel, I guess, room to travel, and we've spoken a few times in the last few weeks as well about the relevance of this parallel channel when it comes to steamroller. And you saw that we have a really, really nice touch off that parallel channel there right here before this particular bounce and that hit off that demand zone, which was a really beautiful touch on there. So if we're looking at the structure of a broadening ascending wedge, we've got 1, 2, 3, 4, 5, or let me just do that one again. 1, 2, 3, 4, 5. And then if we were to continue up, we would likely have a retest of this sort of area here before the next move up, where we would again sort of be looking to make a decision on whether we do continue up or likely have a rejection. Because if we look at the daily time frame Ads, and we said this just before we jumped on as well, we're starting to see a bit of weakness now on the daily time frames, where yes, our RSI is looking very, very oversold. You can see where it was previously before we had a bit of a dump. So that's not to say that there isn't a little bit of room to move still on the RSI, but looking at the significance of where we have been in the past in relation to steamroller, our custom indicator being here on the daily and here on the daily, we're now reaching not only this sort of oversold dot condition, but this quite heavy, rather overbought condition on steamroll that I always tend to pay attention to, that pops up on any asset or chart that we're looking at. So yeah, that is a high quality supply up there. It is that 27 extension as well, where we likely tend to see a bit of action. And we spoke about that, I think it was last Thursday or Tuesday, where whether it be your top extension or your lower extension on the fibs, that 27 often acts as a pretty significant level of support being at the bottom or resistance being the top here at the moment. So we definitely could flutter in this area for a little bit before we make up our mind. But I think looking at where we are now, it really, in my opinion, is the FOMO that's driving this rally at the moment. We're seeing so many bullish articles about JP Morgan putting some of their allocation of capital into BTC. We've seen the PayPal thing at the moment. There's not, I can't recall I think it was the COT indicator ads. If we can pop that up on the screen, it would be really interesting to see that. And shout out to Fergs, who's one of our mods inside Discord, that has popped this up a fair few times. And what it does, it shows the relation between institutional, professional, and retail buying when it comes to a particular asset. In this case, it's Bitcoin. And what we're seeing is the retail allocation of capital still quite high in BTC in particular, where the retailers are still trading quite a fair bit. The professionals tend to sort of get the jump on whether it be long or short positions, and then the institutional money is sort of fading out a little bit. And that's not to say that that's exactly what's happening in the market at the moment, but when you do look at that COT indicator, which we will find and pop up in the Discord. Yeah, that's right. We'll find it and pop it up inside the Discord as well. So you can see that for yourself. The big money is sort of seemingly not as interested in putting too much capital into BTC just right now. But looking at the monthly close, we had a really significant monthly close as well. If we can bring up the monthly chart as well. If we bring up the monthly, we had a really, really strong monthly close there. But again, it's always very cautious. It's best to be very cautious of big monthly closes. But this one was a very big bullish engulfing candle of these previous two pretty weak monthly closes. So, a pullback is still healthy in the overall uptrend of this particular market. So don't think that just because we've got a very strong monthly close or whatever you're seeing on the chart that there can't be pretty deep corrections. But overall, in the sense of things, that's still healthy in an uptrend, what we're seeing at the moment. So interesting. If we just bring up, maybe if we go back to the daily chart and just click on one of these lines on this COT indicator, we can show you what each of these means. So the black one, and maybe, we'll change the color so we can make that a little bit more easily visible.
So the retailer trader net. So the retailer traders is the top
pink one.
Yep, top pink.
Retail.
Let's say blue. The middle blue is professional, and the institutional is the yellow.
So the institutional, that's the big money, right? Retailers are the small fish, and your professionals are still obviously very high net worth individuals or high Bitcoin net worth individuals that are trading this market. So they're still a little bit kind of flat. I guess you would call this like your midline. It's very similar to your RSI 50 midline. Where it acts as levels of support or resistance. Not that you really look at it in that sort of respect, but you look at where the professionals are sort of scaling out or indeed sort of increasing their position. So that's a really interesting little one. But this is the one where I would be paying most attention to, and these ones, and not paying a great deal of attention to the retail traders, because they're the FOMO dumb money that are still buying this market and hoping for moon missions from here even still.
Yeah, and that's the scary part of this market, where you've got massive increases in price action that can only be explained by retail FOMO, and that's what we're seeing right now. Like, you can see that directly from this COT indicator that's pulling the data out of the CME. That is since let's say since the 27th of July. So since we had that movement up out of 10,000 or past 10, it's mostly been retail driven. So it's a very interesting thing to be aware of. BTC COT. That's what the indicator is called. Have a look for yourself and make some correlations for yourself, and just be aware of its existence. Excuse me.
Yeah, and it's interesting looking at the total market cap of BTC, or rather the total market capitalization since the 8th of October, where we sat at 333 billion. We're now sitting at about 395 billion. But again, a correlation that Fergs, shout out Fergs, made previously, where we were sitting at this level here, which was the 2nd of September in 2020, where we're at about a $383 million capitalization. And then we took a little bit of a a dive down to that sort of 325 level, which was around the 7th of September. So a pretty large, I guess, exiting of the market for a few people and capitalizing on those higher moves and then pulling out of the market. And we're teetering on that sort of level again. So just be cautious. I know we're always like, yeah, it can't continue this sort of run or whatever it is, but we're really just being realistic in what you could possibly expect in this market. Don't get caught in the FOMO.
Yeah, exactly. And when we want to give you the most realistic view of this market. We don't want to push any specific ideas in the way of driving FOMO or anything like that. So we're just reading to you what the TA says to us. We're just saying on the daily time frame we're quite overbought right now. We have a double top on the RSI, so that suggests a bearish divergence. RSI is quite overbought at the moment, so that's suggesting some sort of weakness or some sort of exhaustion in the trend. If we do have a push up to 13.8, more than likely, in my opinion, that will be the end of the run. I wouldn't see it going further than that unless we had some crazy injections in the way of volume, and then it would be all mans for themselves in the way of FOMO. But as you saw just then on that CME breakdown, most of this is being traded by retailers. Professional and institutional traders were averaging out of this market at around 10,000, 11,000. So that might be something to pay attention to.
Yeah, and as I said last week, I was out of a good bit of my position at 12,850. I've not re-entered the market as of yet. Obviously, I've still got about 40% of my trades still on. I exited about 65% of my position. That was just a spot buy and then letting kind of the rest run. But again, and not meaning to harp on it, just be cautious of where things are sitting at the moment. Don't go too deep in positions. Stick to your plan. Stick to what the TA is telling you, and be cautious of this market. So yeah, definitely look to see what happens around that 3,250, between 3,250 and 13,250 rather, and 13,500 is where I will be looking to probably layer out of a few more positions as we hit that top supply zone.
Perfect.
All right, FUSD reacting quite a bit differently to BTC at the moment, particularly over the last night or so, where we saw that pretty deep drop and I guess a few liquidations for long positions at that particular drop ads.
Yeah, absolutely there was. So we were looking at this descending channel, this descending structure on ETHUSD last night. So
how good was that? If you entered a position on that steamroller exit, bang.
We were looking at this last night. We were looking at this descending structure last night. We were, more notably looking towards this level of demand here. And it exceeded my expectation in the way of demand by falling to the next, pause in the market or next very short-term demand level at about 385. Or sorry, excuse me. Yeah, it's about 385. 382, there you go. So where to from here? We have broken this level now, this level of supply. If we can reclaim, some area around here, that would be a decent level of resistance that I'd be looking for on the short term. So using our trusty horizontal ray, using some of these wicks to really designate where that area should be. So that there would be the resistance level that I'm looking for. So I'm looking for a lot of these retests and wicks. So support resistance flips there to really gauge where this will go. And we're going to make the decision on ETH exactly at that point, which is $400. So that'll be that psychological resistance as well. It's going to be interesting.
Yeah, 100%. And we've spoken about it, not to harp on about it so many times, that 400 level and the significance of that $400 level. And almost sort of painting a similar picture to what we're seeing here, where we had this little impulse move up and then we just seem to go like a deflated balloon. It's kind of the same thing again. So that's that demand zone could potentially be on the cards again, and then that resistance level at that 400 could certainly see a little bit of a bearish retest there, or indeed if we really need to make a higher high there if we're going to make a continuation above that 415 level. So between where we are here and that 400 to I guess I would say sort of 408. again, would play a very similar sort of structure to here, where we saw that, I guess, that triple bottom, I guess, before the next move up. So could certainly see that again on USD. One thing I did want to highlight, and I said this to ads beforehand, if we do go to our Unicorn indicator, which is our EMA cross indicator, we have a whole bunch of tools inside that. But if we just turn off our EMA cross signal ads and just keep on our super trend exit and zoom out a little bit, one thing that I did want to highlight on the 4 hours, just how well this indicator has treated us in terms of bullish or bearish positions. Not so much when we're consolidating before particular moves in this sort of market where we are chopping in between a particular range, but from here, from the 8th of September all the way to kind of where we are now, it's given such good signals to enter or exit this particular asset. So if for anyone that does have a Unicorn indicator, I would definitely be looking at the super trend exit. I sometimes get a little caught up in just our EMA cross signal and forget about the power or the accuracy, I suppose, of that EMA cross. The super trend exit. And again, it's even more so if we do go to the daily time frame ads and then bang that on. Looking back at the validity of that particular signal from the whole lot, really. Again, we're consolidating in that range. So there's other indicators like Unimoku that you could use to gauge overall trend, or you can go down to the smaller time frames on your EMA cross and use that particular strategy if need be. But looking at the accuracy of that for long and shorts from all the way back at the start of 2020, you really could have just ridden the wave on F using just the super trend exit. So again, for those guys, you can go to unitytradinggroup.com and go to our indicators. But for those who are lucky enough to have this already, pay attention to that indicator because it's an absolute doozy.
Absolutely, it can be all yours for $25 or $24.99. I think it is on the website.
It is, and if you can't make $24 off that indicator, I'll pay for your subscription. Myself, and then pair that with the likes of something like Steamroller, for example, which is we know is just stupid accurate. Looking at that, it's use that for your entry, use that for your exit. Not too bad whatsoever.
Absolutely, it is.
One particular one that I wanted to pay attention to on some of the USD pairs and get your thoughts on ads was like the likes of BCH would be a good one.
USD pair.
Yeah, the USD pair. When BTC has little moments like this, I tend to stay away from some of the Bitcoin pairs and tend to look a little bit more towards the USD pairs. And I'm interested to get your thoughts on this because a lot of chat about it. I think on the back of that PayPal announcement where they were, I think talking about Bitcoin Cash as one of the coins that they would accept or allow transfers through. I can't quite recall, but for some reason or other, Bitcoin Cash keeps coming up in a lot of feeds that I tend to look at.
I'm just doing my levels now, and I can't really see anything decent to use apart from maybe as
because I haven't
support
looked at it whatsoever. Again, if you look back while Lads is doing that, you look at the validity of that parallel channel on Steamroller and how well that's worked, not only from where the entry signals that it's given down at these particular levels, but also the exit signals that it's given you too on the 4 hour and the daily.
All right, so from the swing high to the swing low on the overall Fibonacci levels, we've retraced back up to the 78.6. 78.6 is quite significant in the way of big retracements from large drops because they tend to bring these runs to an abrupt end, and that's really what we've seen with Bitcoin Cash. That and the fact that we are at a quite significant daily level of supply there too, so that was tested quite nicely, and that was nice, or that was respected nicely, should I say? But right now, honestly, I'd be paying very attention to these level of fibs as well. Ty, this 61.8 level, as we know, is quite significant at $260. If we come down and close below this 61.8, it's not looking good for Bitcoin Cash. I'd say more we were heading towards that level of demand there at 252. If we can, hold this level and close above the 61.8, not right now, but maybe over the course of this evening into tomorrow, that might suggest we might be coming back to retest possibly that level there, where we found some level of resistance turn support. and that might be at a decent level for a retrace, for maybe that lower high to continue down. There's a couple of scenarios that I'm seeing play out here.
Yeah, I've just TA'd this myself for the first time. Admittedly, the only reason why I asked you was because I respect what you have to say when it comes to TA. Looking at the daily time frame, I've just banged on a couple of our indicators. One being the EMA fan, and looking at the significance of that 50 fib level, that demand level, and that MA support that we're seeing there at that 50 fib and demand level. So we've got our 200, our 150 MA cluster, and if we also just bang on, not to make it look too busy, but our Unimoku indicator on the crypto settings. So that's the 20. Yeah. So again, looking like it, if we find weakness here and we can't end up getting a retest of that particular level, I may set some alerts down there tonight and just have a little bit of a look. The thing that concerns me about that is that daily steamroller indicator oversold condition that makes me a little bit nervous about entering any sort of aggressive longs at this point. So maybe a double bottom at this demand level could be on the cards, and that would also make, if we did hit the bottom of that demand level on that 50, a nice little edge to edge trade and potentially some Kumo support at that area. So I think I'll set some alerts on BCH tonight.
Yeah, so yeah, you go. I haven't actually traded this for quite some time.
It's been such a long time for me.
Yeah, because of that whole crap that went down. I think it was the start of this year or last year.
Yeah.
So I'm not too in line with Bitcoin Cash at the moment.
Yeah. Interesting one. I just thought I'd have a little bit of a look at. All right. Is there anything that we want to have a look at before we get into the reg markets ads? Again, for me, alts, I'm staying well away from them.
I might just have a quick look at the BTC dominance chart, because we did reclaim and push through that level of supply that we spoke about. I think it was last week. Honestly, I haven't spoken about it this week as of yet. If we're looking at a daily time frame, it paints a little bit of a different picture. We'll keep it on the 4 hour. But we are looking at a level of supply then. I have no idea how that even got there. That would be something like that. Good on your trading view. Let me just see if I can make that a little better. Something like this maybe. No, we'll revisit that. I'll keep it there for the moment. But in the way of the BTC dominance, it's going to be interesting over the next couple of days, because we have been surging to the upside, and that's no surprise, because BTC's movements to the upside in the way of we've gone nearly $1,000 in the last 2 weeks. So yeah, not a surprise there. However, we have pushed through this short-term level of supply there. However, I do still think that this has some validity to it, and we are going to get held up here again at 62.59, 62.58, roughly there, 62.58% in the way of that's the way this chart works. But something to keep an eye on, if we do have some sort of hold up at this level, then it could be a catalyst for maybe a movement down for BTC. Not something you should base trades off, but something just to keep in mind. That's all. Perfect though.
All right, getting into the reg market stuff, of course, anything that we do share when it comes to regulated markets is just opinion. If you do want more advice, you can speak to your financial advisor. That is not us.
All right, so the first thing I want to bring to your guys' attention right now is what's going on in the way of ASIC and the intervention and what's going on with Forex as a whole. Unfortunately, this is something we spoke about, I think it was last year, Ty, about ASIC's movement into regulating the Forex space.
Yeah, and we were a bit confused because I thought it was meant to come in early 2020, I think, or maybe even late 2019. It seemed like such a long time ago, and it never seemed to come into place. And then bang, out of the blue, here we are now with this announcement.
Yeah, so what you need to know, basically, they made a recent announcement, and they delayed it, admittedly, last year because, I don't know exactly why they delayed it, but they did. And now it's coming into fruition because there was such a lot of money lost in the CFD market within this COVID lockdown period. A lot of traders have lost more money in this period than 2018 and 2019 as the whole year combined.
Yeah.
So it's a little bit understandable, should I say it that way, that this is coming to light now, and they want to get these interventions or these leverage caps put in place. So basically, as we all know, and as we have said in the past, especially with our Forex Masterclass, that the maximum available leverage to an account was 500 to 1, in the way of you could use 500 to 1 to trade major currency pairs, so Euro, USD, CAD, Swiss franc, all the rest of them. And now they are going down to 30 to 1. So that's going to be your maximum leverage available on major currency pairs. Indices, gold, etc. You're looking at 20. Commodities, excluding gold, looking at 10. Cryptocurrency assets, just 2 to 1, so 2x. And we're looking at 5 to 1 leverage on shares. And they're limited to US top 60, I believe, on Pepperstone. So a little bit disappointing, honestly, for a lot of the guys that I've spoken to over the course of today and last night when this was sent out. A very disappointing movement by ASIC, and taking a lot of freedom from from retail traders, honestly, because now with a 30 to 1 leverage, you need at least something along the lines of 3.25x in terms of your capital investment to meet a 100x account while maintaining the same sort of risk management. So it's a little bit disappointing, and not something that we're looking forward to coming into effect, which is from the 29th of March 21. So if you're trading Forex and you haven't heard about this as of yet, something to keep in mind, and something to weigh up if you're thinking of going into this market, and depending on if you want to do that now. So I know it's going to take a lot of freedom away from retail traders. But anyway, we'll move on and we'll have a look at the US dollar. So like Ty said, not a financial market, just ideas and opinions of Team UTG. We have been dabbling around this level of supply at the moment for quite some time now. It's been a couple of days, even the end of last week, we were looking at these levels be respected. And, with these movements so far into that level of supply, it's it's something to be expected that we're going to be moving through this. We know that the rules of supply and demand dictate if we move through a level with quite significance and we start eating away that level as we have in this portion of the chart, that we are going to more than likely get that volume into this to move that market up and beyond that level. So that's what's happening now. The next level that I'm really looking forward to or looking at is this level here, which is around that 93.37 area. So 93.37 is where I would expect this US dollar index, so the USD index, to continue up and retest. So that would be, loosely correlate with our negative 27.2 fib extension also. So this area, just in general, but I do expect it to get to 93.37. That would be the area that I'm looking forward to, and more than likely it will end up there, based on some of the information that we've got now. And that would, continue this trend to the upside, or continue this reversal movement to the upside where we've made a high. But the one that I really wanted to look at today is this index. So I did post this chart exactly on the Discord this morning in the stock channel. And we're really seeing this stuff come to fruition now, where we've had this level drawn in for quite some time. And you can go back and have a look at some previous videos to verify this. But this level of supply has been there for absolutely forever, and we've been expecting some price action to get there. So not only have we gotten there after we had that front run, we are seeing this being respected to quite some significance now. What I was saying to a friend of mine the other day is I would expect it to get to, about the 50-61 Fibonacci area primarily before that level before the All Ordinaries is going to make an overall decision on our trend. So 6139 is where I expect it to get to over the next little bit, that area of interest right here. If we do hold the 61.8, great. We can discuss some more options in the way of what price action can do after that. But if we don't hold this and continue towards our 78.6, our 6050 point area, level of demand, that would be, you know, pretty bad for the all ordinaries, to be honest. And subsequently, that'll probably translate over to the SPX 500, and this could kick off some sort of sell-off for that stock market. Something we've been discussing for quite some time. Nothing new at all. We've been really expecting a further movement to the downside. Recessions don't get resolved in 10 months. So something that we're not endorsing. We're not saying that it's going to continue up forever. There is going to be another substantial correction, and more than likely, if what I'm thinking comes to fruition, this level of supply was always going to be that level that they were looking towards before, moving down a further, predetermined amount. So we don't know what that could be, but it could kick off that level of downtrend, or that downtrend that we are really expecting, within a recession, sort of environment. But yeah, that really concludes what I wanted to say about the reg stuff. I'm not going to go over gold and silver. It's obviously going to be moving towards the downside as the DXY moves towards the upside. So just make sure you're taking that into consideration. But again, thanks for joining us. Like the video, subscribe to the channel if you haven't already. It helps us out a lot. Join the Discord. Everything is down in that description. So all the links you want to find are in the description of this video. And yeah, we'll see you guys tomorrow for our daily update. Ty, anything you want to add before we head off?
That's it. Any comments or feedback or things you might want to see, leave it in the Discord or leave it in the comments in YouTube. Look forward to seeing you on our next session.
Thanks, guys. We'll see you then.
Bye.